All right. Sorry for the delay. We had a little bit of a technical difficulty getting started. So I appreciate you guys hanging on for just a minute for me, waiting for me to get everything set up. They sent me a new update of the software just as I was trying to start my class. So jump in and try to start the class, and don't really know that they're going to send me an update until I try to start the class. And then they sent the update, and then it took a while to get it to come through. So I got the new update, and then I guess it's working if you can see me. So it's the StreamYard that I use to run these classes with. All right, so I'm very excited to come in here, even if it's just a couple minutes late, to try, and we got a trade today. The market closes in about 50 minutes. So we got to get some trades off. But I want to teach you a little bit of a lesson about OCO and OTO orders. I want to kind of pick up where we left off last time. And we're going to go through and demonstrate a little bit. We're going to come down here to the NASDAQ. And then I like to demonstrate on the NASDAQ because it's a fast-moving market. And so it gives us a little bit more to work with when we're here trading. All right, you don't have to kind of sit here as long waiting for something to happen. Now it's a little bit more risky too because it moves a little faster. So we have to take that into consideration. But it is a great market to trade when it's moving because it has a tendency to trend nicely. And when it does trend and you're in the full size, which, well, we're in the mini, not the micro. So this is the mini. You make a lot more money a lot faster. So oftentimes what I like to do is I like to start off at the micro with the mini, make a good chunk of money, right? Hopefully. And then we jump over. If we want to continue to trade, we'll jump over to the micro so that we don't lose everything we just made. All right. So that's kind of a name of the game. Oh, this seems a little volatile. Well, it's running on a range bar 6. We like to go out to range bar 12 when trading the NASDAQ because it is a little bit more volatile market. I like now that's a standard range bar chart right there. I'm going to turn on the Fibonacci, which is my cheat codes. Boop, there we go. Looks a whole lot nicer to me, easier to trade. All right, so there's a nice little trend in the market. You can see that we're just going to kind of go off the arrows, but there's also some recurring price patterns in here, like this little setup right here, where we see the market took off right here. So we got a nice little rally, and then it pulled back, and that's a trigger. That's a setup for me right there. That's a little buy signal right there. So I'll take those too. I like to get in on those little buy signals as well. So here's another one. So you see the market rallied up, turned a little bit red, started to go green. So red to green right there. I'll take that one too. I like those. All right. So that's a nice little 3-drive pattern right there. Drive 1, counter trend, drive 2, counter trend, drive 3. And once it does that, then I expect the market to flush a little bit. Now, sometimes I'll expect it to come down like this, and this one didn't. Of course, it come up. Now it's breaking above the previous high. So we'll kind of keep our eye on those patterns as well. That's kind of something that we want to always be mindful of. See, we have a nice little run up like this. It comes down, and then we go to a nice little green to red right in here. You can see it turned, and that started to go back up again. So those are some places where we're willing to get in and take a risk on the market. So right now we're kind of just sitting here going, well, I don't know what it's going to do. So you want to sit on your hands for a minute. So while we're sitting on our hands, let's come over here and look at our trading tab. And in our trading tab, we're going to come in and we're going to do the OCO. We're going to set these up. Now, if you remember, last time we were here together doing day trading, which was what, last Wednesday? Was it that long ago? Maybe it was last Friday. I can't remember. I think it was last Friday. Look at that nice little trend right there, and a nice little break out of that little triangle wedge formation. It's trying to go long again right there. So that's not as high a probability, but it's still a little buy signal right there. So that's a buy signal we could get in on. But I want to show you the setups for that we're working on. Now, in track and trade, you have the orders. You just hit a buy market, a sell market, a stop, and a limit just off of here. This is called manual trading. All right, this is manual trading. And then down here, these quick custom orders, this is called semi-automatic trading. Now, this is my favorite because I'm kind of a control freak and I like to be in charge. So that's semi-automatic, and that's one we're going to play with the most today. But I want to come over and show you, we got autopilot right over here. And this is fully automatic. So those of you who shoot guns, you know that you have bang, 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 right? Bang, load, bang, load, bang, load, bang. That's fully manual, right? That's this one here. That's this one here. These buttons up here. Now this one down here, semi-automatic. Bang, 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 bang. Every time you pull the trigger, bang, 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 shoots a bullet. Now, when you come over to the autopilot, This is fully automatic. It's like a machine gun. Pull the trigger one time, and it just keeps going. All right. So that's why, kind of think about it like that. That's kind of how these markets work. Okay. Or these tools in the software works. Now, this is a lot of fun to play with, but my favorite is to be over here. I like these bang, 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 bang. That's my favorite. Okay. I like to be involved a little bit more. I don't want just the computer to just do everything. I want to be somewhat involved. I want to try and make the decisions, because I have this delusion in my mind that I can pick market direction a little bit. All right. So look, see, we got our little breakout, and it's faking. It's dying on us right here on that little triangle wedge is dying on us. Now we're getting another one right here. See how we're getting lower highs right across the top there? That's another little, it's not really much of a setup in there. It's just lower highs. So this is just really, that's why I said this is not a real high probability setup right here. It just happened to be a little breakout to the upside of a little wedge pattern. Better down here where you get red to green, red to green, red to green, red to green, red to green. After big green, red to green, like that. Those are a little bit better. And then you get this nice little 3-drive pattern, a little pullback. You just kind of read the chart the best you can. Just do the best you can. You're never 100% perfectly right on these. Just do the best you can. You get a little arrow right there. You want to take that little arrow, you can go ahead and put it in there if you want to. The market's bullish overall, right? Overall, the market's, it's in an uptrend. So it'd probably be a little bit more aggressive to the upside than we are to the downside. But it's been going up for a while, and oftentimes once it goes up for a while, well, then it likes to turn around and come back down a little bit. So nobody knows where the market's going to go. We just do the best we can. That's why if we're wrong, we just immediately get out, because we don't want to take a big risk in anticipation that market's going to turn around and come back for us, because by the time it turns around and comes back for us, we might have lost a lot of money. We don't want to do that. That's no fun. We don't just take little tiny losses. If it doesn't immediately go in our favor, just get out. All right. So this is the part I want to talk to you about right over here. We'll talk about the autopilot. We'll go play with autopilot next week. All right, I promise. We'll come back and we'll run through it looks foreboding and daunting in there. It's really not. It's really quite simple. Little simple setups. All right, but if we come over here and we work with the semi-automatic and we get comfortable with this, then when we go to the automatic, we know more what to do. You can't automate something that you don't know what to automate. All right, it doesn't come with systems that's like, oh, just plug in this black box system and you'll be rich, rich, rich beyond your wildest dreams. No, that's not what it does. All right, it's got a lot of indicators in track and trade that you can trade. So, I want to trade the ATR, or I want to trade the MACD, or I want to trade the RSI, or I want to trade the stochastics, or I want to trade XYZ indicator, right? You can trade all those. And then this just goes through and says, okay, we're going to trade this very popular indicator. And then when it gives you buy-sell signals, how do you want to treat it? You want to get in on the arrows, and then how do you want to get out of the arrows? All right, so how do you get in? How do you get into the market? What indicator are you going to trade, and how do you get out of the market? So it looks more complicated than it is. It's not really that complicated. We're gonna spend our time today over here, semi-automatic. All right, just wanted you to be aware that the automatic one is there. So a lot of people ask, "So can't I just turn on the computer and let the computer trade?" Yes, you can, but track and trade doesn't come with preset. Oh, this is going to just turn it on, black box system, make you rich, rich, rich beyond your wildest dreams. I would rather teach you how to set up your own strategies so you can work with them and change them and modify them based on what the market's doing, than just give you some black box and promise you it's going to make you rich. All right. Those things never work. It always takes a little bit of intervention, in my opinion, somewhere along the line. So you have to make changes. Even if you just turn it on and say, okay, I'm going to run the autopilot. Well, eventually the market's going to change. You're going to have to change your system, and you're going to have to adjust to the market. All right. Because markets are not always exactly the same. If they were, we'd all be rich, rich, rich beyond our wildest dreams, because it would be easy to set up a strategy if they were always exactly the same, right? Okay, so we're going to come through here, and I'm going to show you. Now, the way this works is we got one list, all right? So the list is exactly the same, but we can put it on as many buttons as we want. So we can have as many buttons as we want, but in the list, if you notice, when I go down here, the list is exactly the same. So whenever I create a strategy in here, it'll show up in the list, and then I can assign it to any button I want. All right. So that's how this works. That's really cool. It's really easy. You just come in here, and you can have more buttons. You just hit plus right there, and it'll give you another button. Hit it again, it'll give you another button. So you don't want to get too many buttons. You start getting out of control. You have too many buttons. All right. So we'll go back to 4 buttons. We can maybe have 5 buttons. So we'll come in here, and you can notice on the list, I'm going to show you the first one is just a market buy order. And then it's got to stop at 25, and we're going to trail on the ATR with a limit of 12. So what does that mean? Let's come in here and drop it down. But I'm going to right click on it. I'm going to say edit. I want to actually edit that one. So I'm going to right click on the button, say edit the first one, which is buy market. So that's the one we're going to edit. So what it really means is we're going to buy the market. We're going to put an attached stop. It's going to drop a stop underneath the market or above the market because it's a market order. It can go either way. Actually, this is a buy market. So it's only going to go up. So it's going to drop the stop underneath at 25 ticks back, and it's going to put a limit order 12 ticks out. So it's going to take a profit and risk. But the 25 risk is going to jump immediately because we told it down here to trail on the ATR. So it's going to immediately, the stop is going to drop at 25, but then it's going to immediately jump to the little green dot, okay, which is the ATR in this example. If it doesn't, then we're going to sit there at 25 until the green dot comes to this side of the market. All right, the dot's got to be on this side of the market, otherwise it won't jump to it. Okay, so that's because it's a buy. Now we're going to come in and look at the same one over here on this side. Right click, and we got 20, 20, 20. Where is it down here? 20. This is a sell. Okay, so we got a 20, and this is oh, that's a buy market. Is that the one I just did? What did I just do? Buy market, stop. Oh, why have we got two 20s in there with the same thing? Oh, this is the sell down here. Okay, so now this one is a sell market. Stop is 25, so it's going to put it above the market with a limit of 12 to take profits if the market goes down, and then it's going to trail on the ATR. So very simple stuff, right? We're not doing anything real complicated, but that's what's great about it, is because it just does it all with one fell swoop, puts them in there, and it's an OCO, meaning that it's going to cancel one if the other one gets hit. So if the stop gets hit, it'll cancel the limit. If the limit gets hit, it'll cancel the stop and take the whole thing out, clear it out, and you won't have any risk anymore on this on the market. So let's just example a couple of these. Let's see if we can. The market's not really doing anything fun, but we've only got a limited amount of time. So I want to, if it'll go up and if that green dot will come to this side, we'll hit the market buy one. All right, the QOCO1 or QCO1. See if it'll go up. If it does, it would give us a little buy arrow. The market just suddenly died on us. Okay, now, well, we could do the sell one because the dot's above, right? So that would mean the market would come down. So if we think, but the market wants to go up right here. But we're getting a little green on a red down. So we got lots of downs. Now we're getting some little greens. It might go down again. Okay, we're going to go in there like that. All right, so we're short the market. Short means that we're going to try and make money when the market falls. So now what we've got is we got an OCO in here. So if it comes down and it touches the limit, it's going to give us the profit between where we got in and where, well, we just made 60 bucks. All right, so that's how that works. A little bit fast. So now we have to wait for another setup. All right, so we just did quantity one. If you'd have done quantity two, you'd have made 120 bucks. But if you do quantity two, you say, well, I want to make more money, Milan. I'll just do more of them. Okay, well, you're taking more risk too, right? Because if you're wrong, it knocks you out with more risk. So here's coming up again. And it looks like it's being choppy on the way down. Choppy down means this is a counter trend. It'd be more likely that it goes up more smoothly. But we could still trade the downside. So we got sell market, right? Oh, we could have taken it. Yeah, it's trying to drop again. It's being choppy. So you take a small risk, it gets close to the little green dot and then flushes out again. This is called scalping right here. All right. Day trading would mean that we'd probably go out to a longer term time frame. We'd try to catch a longer trend. This is just kind of taking little pieces out of the market. And if we're wrong, it'll go up and hit our little green dot, which in this market might happen. Look at all the topping tails and bottoming tails. This is a really nasty trend right here. Don't trade this kind of a nasty trend. All right, not with real money. This is just practice right now, but this is kind of the idea. This is the concept. All right, this is choppy. We don't want to trade choppy markets. Okay, we just got stopped out and lost $15. We made 60, lost 15, so we're up $45. All right. Now the market's trying to turn around. It's trying to go back up. So we make maybe a little ABC pattern in here. From here to here to here. It's trying to go up a little bit. Let's make that a little bit bigger. Let's make those lines bigger. Oh, there we go. Okay, go back to our trading tab. All right, now I'm going to show you something else that's kind of cool. We're going to use this one here, which is the stop. Okay, it's still a 20. Do we have any other 20s in here? We have 20, 20, market buy, market sell, and market stop. Okay, so we only have this 20. So we're going to do this. Is that a 20? Or do we have another 20 in there? I thought we had a 20 limit. 20 stop. So they're all kind of very similar. Okay, so we just have 3. So we're going to come in here, and this one we're going to come in, we're going to use a stop order. All right. So a stop order means that it's going to automatically trail with an open stop on the little green dot, because that's how we have it set up. Let me go show you. 20 stop. And it's a stop order with a 25 on the stop and a 50 on the limit. And then it's going to trail on the ATR stop for entry, and it's going to trail on the ATR stop for exit. So it's just trailing the ATR. It's all it's doing. Very simple stuff. All right. But that sometimes simple strategies are the most powerful. So we're going to come in here. We're going to drop that above just like that, because it's a drag and drop tool. Remember, we just click the order, drop it above. It automatically puts everything where it belongs. So it's trailing on the green dot. So if the market turns and starts to go up, it crosses the green dot. The idea is that it will catch an intercept order. It's what we call an intercept order. Okay. Now, as soon as that green dot flips to the other side, this order will jump to the dot. See, it's sitting at 25 though. That's kind of far back for this market. We could probably put it a little closer. We don't want to be quite there, but it's got to sit there until the green dot flips. And the green dot's not going to flip until the market goes at least, in this case, 12 minimum moves, because it's a range bar 12. No time involved. The market's got to move in our favor at least 12 ticks before we get that dot to flip over to the other side. All right. So right now it's going to sit at 25. And I'm sitting there looking at that going, that's a big risk. What if we just went to 15? So we can come in here and adjust it. So, okay, on this particular market, we want this to be 15, maybe a little closer. We don't want to take quite such a big risk. Change that to 15. So next time we do it, we won't be quite so risky. They'll push that a little closer. Right now it's sitting there waiting for the dot to flip. If the dot would flip, we'd get a, come on, that was close enough. That should have been a flipper. We got to go 12. There it is. Now we got our flip. So it's got the dot in there. All right. So that moved us up to where we don't have as big a risk if we're wrong and it turns around and starts to flush out again. But now there's nothing for us to do but sit here and stab our little voodoo doll. All right. We're going to stab and make the market go up. Make the market go up. Make the market go up. This green guy, right? Make the market go up. Make the market go up. Make the market go up. That's all the power we've got to make this thing make money for us. Okay, and we got this limit order up here. We put it at 50, but that's just kind of throwing it out there. It's kind of random. What we might want to do is say, well, the market has a tendency to come up and test these previous highs. So I'm going to put this down here, and I can line it up. Notice it's got a line that goes all the way across the screen. The reason that's there so you can line it up with previous areas of support and resistance. So if it comes up, and I don't want it to have to pass that, it's harder for it to do. So if it comes up and just kind of wants to test those previous highs up in here, I'll take my profit off. So we're up right now, $75. We're in with just one contract. If it'll go up, hit that, we'll take our $75 off and we'll be happy. But if it comes down, now our trailing stop is protecting us to the downside. So if it comes down, we'll get out without taking a big loss. And in fact, it's moved to break even now. So it's just a little bit above our entry price. So if it turns around and comes down now, we just got stopped out with a $10 profit. Well, that sucks. We're hoping it'd go up higher. But so now it looks like the market wants to do one of these little things like this. Down, flush it goes. All right. So we'll wait and see. We could have taken right there, but I was talking, so I didn't take that one. Could have taken a short position right there as it broke those green dots. Make money on the way down. But we'll wait. Maybe it'll give us a little pullback, a couple little green bars. Right? Maybe it'll give us a couple little green bars in here. It'll come in, make a little green bar like that, and then it'll flush back down again like this. Oop, like that. There we go. All right, so let's wait and see if we can't get a couple little green bars in here. It's being real nice and smooth now. You're really feeling bad you didn't take the short position. Okay, it's coming down. This is 100% right here. Come down. Look at that. It touched it just like a train on rails. Whoop, whoop. Let's put that right where it belongs. So that's a little bit. Let's put it in there. There's 100%. Oh, it went beyond it. There's 100%. So it did come right down. Oh, these two touched it, and then it broke through there. Now it's trying to go back up. Okay, so we're getting our little pullback here. Maybe we'll get a couple little green bars, and then we'll get another little drop like this. We'll see. Nobody knows. Nobody knows. Don't think somebody knows, because nobody knows what it's going to do. We're going to just anticipate the possibility of an additional drive like that, maybe. down to 130.9. Maybe we'll not be so aggressive. All right, maybe that's what it's going to do. If it'll give us the little green dots, we can use the stop. If it doesn't, we have to use the market orders. Okay, now it's making a little bow tie. See the little bow tie? So this is a bow tie, up, down, tie off the bow tie. So it made a little bow tie in here. That's all right. That's what we're looking for, little bow ties. Bow ties here, bow ties there, ABC here, ABC there. Look, that's a reversal arrow. But it could be, oh, that's a big bar. Big bar. Ooh, look at it go. Which direction is it going to go? Okay, we got the green dots. So we're going to come in here and drop this underneath the market. We just drop it right down here. Anywhere down here, doesn't matter as long as it's below the green dots. I just drop it way down here because it doesn't matter. Just put it down here. It's easy. And you click the left mouse button, boom, and it drops everything into place. So now the selling stop is going to trail up behind the market till we get the reversal. Ooh, it's going to go up. It's going to start making higher highs. See, right now it's making lower highs and lower lows. That's a downtrend. But if it goes up and breaks this previous high right here, we're no longer looking at lower highs. We'd be making higher highs, right? So that would be considered like a little head and shoulders formation. So we can have a little head and shoulders in here like this. This would be our head. We're working on the little neckline right here, and then we get a little right shoulder down in here. And then possibly it could take off and go back up like that. But it's just taking off here. Whoa, look at it go. Man, that thing's on fire. Let's come over here. We'll go to preferences and we'll say make that a little bit bigger. There we go. Oh, okay. We just got intercepted to the downside. It wasn't very good feel, but we'll stick with it anyway. Okay, so we got our order. See, we put it $15, 15 ticks that time, so $75 instead of 25 ticks, which was a little bit more. $100. Okay, so we're risking $75 on this one. Now we want to see the market fall. Ooh, it's going to give us two little red bars and go green again. Is it going to do that? That's nasty. If it does, we could just hit the buy market button and go up. So we hit the intercept. It intercepted our green dots. We're risking $75 to the upside. Oh, here we go. It's coming down. It did go up and break this previous high, didn't it? So we're making higher highs. So we're actually ending up a reversal to go up. So how far would we expect it to come down? Well, we could put our Fibonacci ruler in there and say, well, if it comes down to half or 50% of the last major move, it'd come down into the Fibonacci sweet spot right in here and then turn around, go back up again. So it already came down and touched the 50%. Now it's turning around and going back up. We should have probably, I'm going to just take my profits. Oh, I was going to take my profits when it got down here because I'm like, it's going to go back up. Maybe it'll give us one more shot to come in here. I just got to get out before it loses money now. I'm going to turn and go back up. I think we're going to get another rally out of this thing. Oh, come down one more shot, buddy. Get us out right there. Oh, yeah. It took our $20. Now we're out of the market. Now, if it turns and goes back up, we'll look for an intercept to go back up. Because this is no longer in effect. Right? Because this broke higher. So now we got lows and highs. Now where's it going to go? Come on, little snaky snake. It's not going anywhere. It's just going sideways. This is some tough trading. Man, Lan, you're up $75 on that kind of tough trading. You're a good trader. Here, let's try it again. We're going to try and intercept to the upside and see if we can't get a little ABC pattern out of this one. Go ABC. All right. No, it's still coming down. It didn't catch it. Didn't intercept our order yet. That's just going sideways. Look, the next dot is the same. So it's not moving closer. Right now, that's where we're sitting. You just make your adjustments as the market goes and make your swags, your scientific wild ass guess. You don't know where it's going to go. You're just going to play the probability. Just do intercepts. That's what the stop is for. It's just doing intercept orders, intercepting for reversals, right? Across those green dots. The green dot is just the average true range. So if it goes above the average range, that's set. And we got it set pretty aggressive here. We got it set to 6 right now. We could even go a little more aggressive. We could go to 5. As long as the market's it's got too many topping tails and bottoming tails, you can't go more aggressive. You got to go looser. Loosey like a goosey. All right, but right now markets are making pretty good. See, there's one little snag right there that would have got us at 5, but at 6 it didn't. We'll have to wait and see. But I think we can make that a little bit more aggressive right now. Getting closer to where I think it's going to turn around. It's being a little choppy coming down. So see, and it's slower coming down than going up. So that's a counter trend, generally speaking. All right. And it is higher highs, but we had a higher here. So it's just being stupid right now. So just realize the market's being really stupid right now. How you doing, Paul? It's good to see you. Low key, private. Mr. Low key private. All right. It's just still coming down. How about that? It just keeps going down. We just keep moving this down. And it's still above our A point. Our C point is still above our A point. So we're still in an uptrend, but we're actually in ugly. So, we're in an ugly trend. That's what we are. Because this is going higher, right? But yet this one's going lower. It's coming down lower. So it's a broadening pattern. And those are ugly. I hate trading those. We'll see it come down. This is our low point down in here. We got a couple of strong areas of support right in here. See what happens. And that's such a long bar. Look how far back we are. If that thing turns around and comes down, that's crazy. Just trade the arrows, Lan. You just trade the arrows. Just buy and sell the arrows. I know, you do that. That's why I have a strategy in my guide that says just trade the arrows, Lan. That's the strategy you do with the autopilot. Because the autopilot, you just turn it on and it'll just trade the arrows. Okay, we got an intercept here. So now what we got is, again, we're going to risk $75, and we got this intercepted to the long side. So we bring this down here. Now the thing is, look, it came down and it. I want that, but it's right where the order's at. Doggone it. You're going to have to move this. We'll move this because I want to bring it down here. Then we got to put these back to where they belong. Here and here. And notice that it came right down. Oh, touched the exact same low. So a double bottom there. Now it's trying to go back up. Oh, it stopped us out already. A $20 loss. Now it's going to try and come down. Are we going to get another little ABC to the downside? Is that what's going to happen here? Is this thing going to come down like this? Little counter trend and then continue to flush down into here? But the market's just going sideways. I don't think it's going to do that either. Probably give us a little flippity flop and then start to go back up again. So we'll just use a market order. Kind of maybe a little premature there. We'll just put this up here for now. See if it's going to break and run higher at this point. Two little red bars. We'll see if the third bar is going to be green, but I accidentally clicked that buy button, but I think we'll keep it. We'll leave it there for now. I was just going to show it, and then I clicked it. Yeah, sure enough. A little premature. Lost $45 on that premature shot. Now it's trying to go down again. I don't know. I hate to go back and forth, back and forth, back and forth. Market's so crappy right now. I just, come on, do a little bit better than that. We'll give it a shot, though. We'll pull this down out of here. I don't know. I don't like being here because of this bottom, this double bottom. That's a really strong area of support. It's going to go down and break that. Then we'll see it come down farther. We'll give it a shot. Lost everything we've made now. Need to catch a big runner. There's just no big runners today. Look at all these little dead things. All these little dead markets. We just need to catch a runner. Come on, run, run, run. Run, run, run. We need to get that song. What's that song? Run, run, run. It's trying. It's trying to go. It's not very strong. Come on, be a little stronger. Go a little faster. Run, run, run. Maybe if we want it to move a little faster, we go down to a range bar 6. Cut these bars in half. Look at that. All right, we're not getting the good trends out of this. 12's too slow. Let's go down to range bar 6 and see if we can't get a little bit better. Run, run, run here. Get some bar. But see, the problem with that is now it's too aggressive. The dots are too aggressive. Let's go ahead and you just have to back off the dots at this point. So we'll go back up to 6. I don't know if it's going to help us much, is it? Because we just keep getting stopped out on the, if we go all the way out to where we're not getting stopped out, we have to go all the way out to 1, and then you just as well be on the range bar 12 again. So what's the point? The market's just not moving good. We need a good moving market. All right. We'll try it. We'll play down here for a minute, see if we can get a little bit of that. I hope the lesson you're learning here is that when you got a shitty market like this, just sit aside. Just sit on your hands. You don't have to trade. The only reason I'm trading is because we only have 1 hour to trade. I want to demonstrate some of this stuff. And it's just really hard to make money when the market just doesn't want to move. All right, here we go. Let's give it a shot. Let's pull this out a little ways and see if it won't run a little bit. We'll just let the trailing stop try and go. Come on, we got a little ABC bottom here. Let's see if we can't get a little movement out of here. Higher highs and higher lows. Come on, buddy. Thing is, the thing's just going, it's in a big downtrend right now. So this might be a reversal. If it is, where's our target? Well, it's failing on us again. We got stopped out again. Well, so if you want to keep trading, then you can obviously see this market sucks. All right, it's not worth trading. So what we can do is we'll come over here, and we want to keep trading, but we just don't want to risk a whole bunch of money because the market's just not doing any good. We'll come over to the micro. All right. So we'll do the same thing. We'll fix the micro up to be exactly like the mini, but this way we can trade without feeling like we can. And if the market picks up and starts trading, start trending some more, see how dead it is. Can't trade a dead market like that. We'll come over here and we'll play a little bit, but we'll play in the micro so that we're not risking nearly so much money, but we can still practice. All right. Okay. We're going to pull this out of here. So now we're going to not be risking $35, $50, $75 on every move when the market's dead and isn't moving. Now watch, this is, whenever I do this is exactly when the market takes off and goes to the moon. And I'm like, okay, now I just made $50 instead of $500. So Jay's saying he made a little bit of money on that Google option we talked about yesterday in class. Oh, look, this thing just, here, let's come over to the autopilot. Let's set the autopilot up just for fun because this market's not going anywhere. And I'm talking to you guys, I'm not paying. Okay, so we're going to use the ATR indicator. We're going to trade quantity. Let's do quantity 3 because we are in the little account. So we're going to come in here. We're going to do market order. We're not going to use any of the filters. We're going to go long and short. Stop style. What did we have our stop set at? We were doing a stop of 15, right? And then we're going to come down here. We're going to trail on the ATR. And we were putting the limit out here at 50. So just do the same thing. Exit on primary signal. We'll leave that on there. Okay, so that's a real simple little strategy. This is exactly the same one we had over on the other one. It's just going to use a market order. So it's always the market order. So we're going to hit save on that. Hit start the autopilot. Boom, boom, boom. And that's going to trade for us. So now I don't have to sit there and do it myself. I don't have to do it. It'll do it for me. What is it going to do? Every time it gets a buy signal, it gets an arrow, it's going to go long. Every time it gets a arrow down, it's going to go short. And I don't have to sit here and hold its hand because it's not doing anything anyway. The market's dead. So I could come over here and talk to you guys and have a little conversation. But the market's completely dead. We shouldn't be trading. But you guys want to watch it, right? You want to see what it does. So now we're trading on autopilot. You notice that with the green little line right there. That says that's where it started. Okay, so we put this down at 50. We had our stop sitting, and we just got stopped out again because it's not going anywhere. Okay, so it got stopped out. Oh, that was a dumb move. So because it's not, now remember, the autopilot only works on the arrow. And I wanted to get in because it got stopped out, so maybe it'll go again. So I hit it manually right here. The autopilot doesn't care. The autopilot will let you trade with your semi-automatics while it's managing your fully automatic. All right. All it'll do is it'll say, well, it's going to get an arrow. It'll say, well, is Lan already in there with another? Oh, I should have taken that. Well, we just made $6. In the mother market, that'd been $60. All right. So now the autopilot put that one in, not me, because it got an arrow. See, we want it to immediately go in our favor, and it's just not doing it. Come on, there we go. Give us a little movement there. Come on, buddy. Dead market. Dead market. Go do something else. Go play the guitar. Go sing. Go for a walk. Go do something else because this market's completely dead. Here we're getting a little burst here at the last 15 minutes of the market. Come on, let's keep it up. Keep it up, buddy. Keep it up. We're up $18. That'd been $180 in the bigger market. It just got stopped out. Died on us. Lost 50. Oh, we made 50 cents. Got to pay commissions and fees, though. Don't forget commissions and fees. They're not calculated into the demo account. All right. So if it's going to go again, the autopilot's not going to trade because it's not going to, it only trades the arrows. But if I think it's going to go because a little red to green, I might hit it, do it myself right there. That's what that's for. So this is a supplemental. Oh, it comes back and hit our little green dot anyway. Try again. Now go, you little rotten. There's our 15-minute bell. We might have our dots a little bit too close for this market, obviously. There, we hit our limit, took $6 in profit. And we shouldn't, I shouldn't have done that. I should have moved that limit out of there and let the stop take us. We don't know how far it's going to go. Now it's starting to move. Starting to move a little bit. Should we go over to the bigger market? What if we turn off the autopilot? What if we do this? Just for fun, let's go back to the autopilot. We'll stop the autopilot chart. We'll come over here to the NASDAQ 6. And we'll come back to the autopilot. ATR stop. We're going to do the same one. Get me in. Just make sure it's set. Get me in. And we'll turn the autopilot back on. We'll do this on the big one. All right. And then we'll supplement if we need to. All right. Now, of course, I missed it. Just never fails. The minute you turn off the autopilot, the market gives you a really good signal. All right. What's it going to do? What's it going to do when it comes for you? Okay, we've turned the autopilot on a bigger market. This is back to the mini again because it seems to start to want to move a little bit. All right. Go. Just go in our favor. If it doesn't, just get out. Just go in our favor. Come on, buddy. Trading the arrows. Just buy the arrows, Lan. Just trade the arrows. Okay, go, 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 market. Go, go, go. Here, we'll help it. We got to give a little help to the market here. Go, 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 market. Go, go, go. Go, 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 market. Go, go, go. Run, 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 market. Run, run, run. This market sucks today. Holiday markets. Holiday markets. Looks like we're risking about $10 on each one of these trades. We just need to catch a runner. And these are 3 contracts too. So this is still this is the mini. We only lost $10. Can't feel bad about that. That's not very much. We're on a range bar 6, so it's kind of small. Okay, we're up 175, 220. We caught a runner. There we go. We caught one. All right. Keep going, buddy. Keep going. Just take it, Lan. Bring your money back. Get your money back. Yeah, but what if it drops all the way down there and we take $250? Our little stop will get us out if it keeps going, if it turns around. How long? How long is it going to go? Keep going, keep going, keep going, keep going. We're up $200 right there. You can see over there, we're only up $28 on it per right there. Oh, it's going to stop us out. Oh, we made $45 3 times, $40 twice, $40 once, $45 twice. So 4, 8, 9, 10, 11, 12, about 120 bucks, $125. That got us out of the hole. Now we're up $57. Again, I'm just on Tesla mode. It's just on self-driving, right? I pushed the self-drive mode. Oh, it's trying to go without us. I could always supplement right here. If it starts to drop again, we can take another one. Oh, yeah, right there. We'll drop it in just in case. Oh, we got stopped out. 30 bucks. Because it's not going to give you an arrow right here. So because it's not going to give you, if it's not going to give you an arrow, oh, we get stopped out again. Land, quit it. Stop it. Wait for the arrow. Okay. But it's not going to give us an arrow if it starts to drop. All right. We got an arrow to the long side. Oh, failed on us. Just like a good running back and quarterback. Faked one way, go the other. And we get an arrow on this one. Should give us an arrow to the downside. This is chopping back and forth. We got the 10-minute bell's coming here, and you don't want to be in the market with a 10-minute bell because it shoots all over the place. Usually. Wait for the arrow land. Okay, I did. Still got stopped out. They were just getting chopped. There's our 10-minute bell. Told you. You just get chopped all the pieces at the 10-minute bell. Don't ever stay in the market during the 10-minute bell. We're on Tesla mode right now. We're on autopilot, so it's just taking every arrow. Uh-oh, that one failed on us. It only exited one position. That happens sometimes. You get in with 3 and the market only takes off 1. And then you gotta just quickly hit exit chart or do some sort of, look at this. This is crappy. What a crappy market. We went back to the big market only to get our hiney handed to us. Come on, you dumb market. Do something. Ugh. So we should be playing guitar right now, not trading. But I only schedule 1 hour a week on this one, so we got to trade when we're here just to see what it does. Hopefully you guys are learning a lesson not to just keep trading through a crappy market. That's about all I can teach you right now. Just don't trade through a crappy market like this. It's completely dead, going nowhere, got no motivation. There it goes. A little bit. And it's going to come back on us. Come on. You can do better than that. Come on. $105. So when you're down $1,000, $105 doesn't seem like much. That 10-minute bell really nailed us. I told you not to be game. Don't go in the market during the 10-minute bell. That's a good lesson you learned today. If you're going to trade the power hour, don't, whatever you do, but be in the market during the 10-minute bell. 10-minute till the market closes. Okay, we're missing out on this opportunity. Let's see if it'll run a little bit longer. Bring that up. That's only one contract. We're at break even. That's all we got to. Break even. Come on. Ain't nobody trading. Come on, come on. Do my best horse noise. You guys ride horses? I used to have horses when we were kids. Oh, that just made us $60. Should have stayed in. Okay, we'll put our little intercept order in there. Ah, I missed it. Oh, I didn't miss it. I got it. Oh, no, I didn't get it. I didn't get it, but the autopilot caught that reversal. Now let's see if it'll. We're a little close, I think, on the ATR. No, I don't want to turn off autopilot. We'll just have to be close. Okay, here it comes, buddy. Here it comes. Go back to trade tab. Quick, Lan. Okay, we're up $250. Take it, Lan. Take it. Just take the money and run. You're up $300. Just get out. Take it. Oh, good thing you didn't take it, Lan. Now you're up $500. Just take it. Take it, Lan. Take it. Take it. Just take the money. Oh, made $310. Oh. Autopilot's trying to catch us on this Nux reversal run. Oh, lost $20. Okay, go, man. Go. Hey, Lowdown Killer, how you doing? We're having a crappy day. We decided we should really actually be playing guitars today. And the market's just being real crappy today. But we're trying to get our money back. So we turned on the autopilot. We're just trading the arrows right now on autopilot. And it's, rejects. What the heck is going on here? Exchange rejected. I guess we better exit all these. Oh, what the heck happened there? Look at all these things. I don't know what the heck that means. Can't get rid of them either. Exit. Why did the exchange reject all those? They're not active. It's trading with those sitting in it. That's weird. Okay, we're long, but we got no trailing stop. Take that profit off. That's weird. We got this one here, which is still one of the rejected orders. I don't know what the heck happened there. Lan, turn off autopilot for a second. Okay, just turn it off for a second. Let's calm down. What the heck is going on? I don't know. It rejected a bunch of orders and then left these orders they're not active. They're sitting there. They're fluffy. They're fluffy orders. They're not active. I'll answer your question in a minute here. Let's wait for the market to close. Lowdown Killer. He's got a question on the yield max stuff. That's not what we're talking about in this class, but after class is over, after the markets close, I'll sit and talk to you, talk about the yield max stuff. Let's see what's going on here. We're going to see if we can, we got 4 minutes to get ourselves out of the hole. We got to dig ourselves out of the hole. I'm half tempted to turn, but I got these orders here, but they're not live. I don't know what's going on with them. I'm half tempted to put the autopilot back on just for fun. There's little artifacts in here. I'm going to call them artifacts. Ooh, that was a bad move. Market's just dead. Come on, buddy. Let's move some. Let's get a trend in here. We can't get a single trend. It's really frustrating. No trend. No trend, no friend. But it's fun to watch, right? I don't know what these are doing here. I don't know what would happen if I closed the chart and pulled it back up, if it would be gone, or if that's a gecko track and trade thing, or if that's it said it rejected these orders. These are not active. I can't get rid of them. They won't go away. They're not feeling because they're ghosts. They're shadows. See, the market touches them. They don't feel. They don't participate. Let's go into the ATR and loosen it up a little bit. I think it's a little bit too tight, especially in this market. We'll go back up. Let's put it all the way to 1. Should we go to 1? Yeah. Autopilot. Now you'll wish that it was closer when it. Okay, come on, buddy. Now let's rock and roll. See, the green dots are a lot further back. But that's good if it, so you don't get spiky dikey dude. But it also, if it just turns around, you lose more. All right, we're trying to catch a little runner here. We get stopped out $30. You rotten dog. Now we just lost her right there. Oh, see, that's little dots too far away when you're that far away. Where the market's just not moving. Now we're all the way back down to $1,000 again. Lan, put the closer dots. Yes, turn off the autopilot. Yeah. See, this isn't doing us any good with the dead market. It's just all over the place. It's doing nothing. It's not trending at all. I thought I put you on 12. Oh, well, the market just closed. All right. Well, we played. We had fun. Hopefully you learned how some of the tools work so you guys can play with them yourself. Make sure you're trading when the market. That's the one thing that we got to determine. That's why the human's involved. We got to be able to determine when it's time to trade and when it's not. And obviously today was not a time to be trading. We shouldn't have been trading. We could have, maybe if we'd have done a little bit more manual trading and not turned it on autopilot, we might have been able to scalp a couple of pennies out of there with our Minesweeper or something. But we were trying to catch a little trend and there was no trend. We were using trend trading strategies. There was no trend. So take that with a grain of salt. Realize that different strategies for different types of markets. And we didn't do too good today, but we knew we weren't going to do good. We just kept trading because we were having fun. But the biggest lesson to learn is when not to trade. I mean, when not to trade is more important than anything else. And frankly, most of the time it's not, don't trade. It's, you got to wait till the market's really moving before you start to trade. All right, so let's answer some questions. Lowdown Killer asked me about yield max 1 to 10 split. The exchanges, okay, you have to understand ROCC. ROCC means that there's a return of cash and capital on these yield max funds. So let's go take a look at one. We're just going to, for those of you who are not interested in the yield max funds and the splits, thank you very much for coming and playing with the day trading. We're going to switch gears right now and go over and answer a question. This is not what I wanted. I wanted this right here. Okay, let's come in here and pull up one of the yield max funds. One that Ulti. I don't have any Ulti. I've never bought any Ulti. I'm not a real fan of Ulti. And look at it took off. I think that what we need to do is we need to come in here. We're going to go to manage local cache and we're going to delete all because they split and they should have updated their data by now and that'll go back to normal. So we'll close that out. I don't need this, so we can close this. And this one we no longer need either. We can close that one. And we're back here, and we're going to go look at Ulti again to see if that change fixed it. I reloaded all the data because it had the splits, and so it had a funny. There we go. Okay, Ulti's back. See how it had that funny? That's because they did the split. So this is Ulti. I've never really been a fan of Ulti. Never owned it. Don't have any interest in it. Never had any interest in it. Now, let's go over, and not to say that it's a bad fund, but let's go take a look at it's going straight down, just like Misty. But I'm in Misty, and Misty's making me a bunch of money, but I'm really disappointed in it because Misty's going straight down. Let's go look at Misty. Oh, this is Mag 7. Well, I'm going to screw up my Mag 7 portfolio. Let's just work in here for now, in the interest of time. Let's go over to MSTY. Now, this one is Bitcoin, basically, and we know it's been getting beat up because they've been having fights with JP Morgan Chase. JP Morgan Chase trying to put this company out of business. Rotten booger. But anyway, you notice it's a nice little 3-drive pattern. Drive 1, counter trend, drive 2, counter trend, drive 3. And that last trend has been nasty. But maybe this is the bottom. Who knows? Nobody knows. But the probabilities are that's pretty low, right? And we're getting a little crossover here on the MACD, and everything's kosher, saying now we should be buying some Misty. But the market's being manipulated right now. Surprise! Markets are always being manipulated at some point by somebody. This is just JP Morgan Chase is manipulating MSTR right now. So MSTR is the underlying stock for Misty. All right, so that's what's going on. So this is your nice little cap, your topping formation, your little double top, but we got kind of a drive 1, counter trend, drive 2. We got this nice little counter trend here, and there's your drive 3. So is it going to go and up and are they going to manipulate it one more time? I don't know. JP Morgan Chase is trying to put this company out of business, basically. You can go look it up on YouTube and find out all the things that people are talking about. But whatever you think of this market, if you think this market's going to turn around and Bitcoin's going to go up, if you do, MicroStrategy is going to do well. They just bought like $11 billion worth of more Bitcoin down here because they're like, hey, buy the valleys, sell the rallies, right? So that's the move. Now, all you have to realize that when the ROC companies, the Yield Max, for example, we go into Misty or Tesla. Tesla, I think we go into Tesla. This is Tesla. And Tesla actually split. So Tesla, not Tesla, TSLY, and my license plate on my car says TSLY. I thought that was pretty cool. So this is TSLY, and they split. Okay, they're right now at 39. They weren't like at 7. They did a 5-to-1 split. Now you have to realize that ROCC means that they're going to return to you cash and capital. And if you look at Ulti is a good example of that. Ulti is a diversified portfolio. And I wanted to pull up, see if I can get, hold on one second. I'm going to see if I can get into portfolio matrix so we can do some math. We are currently doing some maintenance, inaccurate data response, corporate action regarding stock splits. So he says he's working on it for about 2 to 3 hours. So portfolio matrix is down right now. So I can't go in and show you some of the math. But I wanted to show you the math on this thing. The thing is Ulti is it now trading at 39, and it did a 10-to-1 split, didn't it? Low down. I don't have this one, but I think it did a 10-to-1 split. It might have been a 5-to-1 split, but it's just a mathematical equation. I wish I could draw. I don't have my whiteboard here. I was trying to draw on the charts here. Let's talk about math. All right. Do you guys all know? You all know how to do algebra, right? You're all a bunch of algebra experts. So algebra, you're always thinking, oh, I'm never going to lose. Remember in high school, we always told them, I'm never going to use algebra. Algebra is such a worthless thing. Why am I in here learning algebra? Algebra is dumb, dumb, dumb. Algebra is nothing more than the equal sign in an equation. That's what it is. Okay, so when we do algebra, if we have the equal sign over here, let's say 20, all right, then what we have to do is we have to solve for what goes on the other side to give us what equals 20. That's all algebra is. X, right, plus y, x plus y equals 20. And that could be almost anything you want to put into x and y, right? X and y, 10 plus 10 equals 20. So that's algebra. That's how you're doing algebra, okay? So if you come in here and you say, all right, well, what if x is 6? Well, now you can solve for y to get 20. All right. So you have to solve for y to get 20. Let's say it's 5. Well, that's easy. We just go put 15 in here. 15. Now we have 5 plus 15 equals 20. But you don't know what y is, right? Y is an unknown. So you have to solve for y. And that's all. That's it. That's all algebra is. They just get a little bit wilder and crazier and bigger math formulas to do different things to discover different stuff. But for us here in the financial markets, that's really as complicated as it has to get. Now, what we can do is we can come in and say, instead of 20, we can come in and we can say 20%. All right. I want to make 20% annualized return on my money. Okay, well, what does X and Y have to be? X plus Y. And you can say, well, I want a diversified portfolio. Okay, plus Z plus A plus, right, plus B plus C. So now all you have to do is you have to come in and say, well, what is, to solve for 20%, what is X, Y, Z, A, B, C? What do those equal? Well, maybe X equals AAPL plus MST, right? MSFT plus CAT plus, maybe we want to go into NVDA, right? So you get the return of these different stocks equals 20%. So you have to use computer systems, of course, and do and you have to do what we call brute force mathematics to figure out what you're going to need. You're going to need Apple, Microsoft, Caterpillar, and NVIDIA to equal 20%. All right. That's what a lot of people don't understand. That's what portfolio matrix does. That's the key to portfolio matrix. Portfolio matrix does this brute force mathematics. Now, it's got lots of little charts and graphs and break-even points, and it's got all your dollars and money and all that kind of stuff. That's just your standard accounting stuff from a ROCC point of view, return on cash and capital, high yield, yield first investing. Instead of growth first, which is what this would be, you do yield first investing. All right, so yield first investing, you need to have different mathematical models. So that's what we're doing in portfolio matrix. Now, when you do this, now here's like, Lan, what does this have to do with splits? Well, it has to do with splits coming down here, and you come to the splits, and what was before, you had a, let's say, a $5 stock, right, equals, let's just say, make it easy, we'll just say 10%. So you had a $5 stock giving you a 10% return. Well, they did a split, a reverse split. So then what they did is they come in and they say, now we have how many shares? We go in and we say the number of shares is now a reverse split of 5. Now we have 20, 25, 10, 15, 20, 25. So we'd have 25 shares. So they said, okay, no, you no longer have 5. You no longer have 5 shares. You now have 25 shares. Well, the thing is that our percent gain is still the same, but we have 25 shares. So what was happening is we were doing, right, we're coming in here and we're going 5 times whatever the dividends were. So let's say the dividends were 0.10 cents, right, to get the 10% return. So we had 5 shares times 10 cents equals 10% return. Well, now we have 25 shares. The only thing they did is now they go 25 times. Now it's not going to be 10 cents. It's going to be 5, 10, 15, 20, 25. So we're going to be 5. It's going to be 10, 20, 30, 40, 50. So now it's going to be 50 cents, right? So 25 times 50 cents equals 10%. It's the same thing. 5 times 10 cents versus 25 times 50 cents. Or am I doing it backwards? I got to just, all they've done is they've taken the equal sign on both sides and just doubled everything, right? Let's just do double because that's easier to do the math on. So they're going to do 5, and then this would be 10. So then we're just going to do a reverse split of 2. You'd just now have 10, and this would be 20. Okay, you can do it by 5s. So that's how that works. That's all they've done is just they've just doubled everything on each sides of the, and it still equals 10%. So nothing really happened. This is what we call window dressing. All right. Window dressing is just to make it look better, because when you do the math or the algebra on it, both formulas are still the same. Both formulas are still 10%. You're still making 10%. It just changes the view. It changes the look. Now, why do they do that? Well, because it looks good. And also, the exchanges require you to have a $5 minimum on your shares, or else they kick you out of the exchange. So they had to do a reverse split to have their shares be at least $5 a share. So Ulti is now sitting at what? Ulti's now sitting at 39, right? So Ulti's sitting at 39, but you're like, the market keeps going down. Why would anybody invest in this thing? Well, because it's yield first. So you have growth, which is negative in this case, and you have yield, which is much higher. An ROCC means they're giving you back cash and capital. So they're not only giving you back the cash that they're making by selling options, because that's how they make options. That's how they make their premium, right? They sell their options. They're also giving you back some of the cash that you made, all right, that you gave them. So they're giving you your own money back. But what that does is it gives you a discount. So it says, well, Lan, you overpaid on your shares. Therefore, we're going to give you some of the, you paid $75 as your average cost. We're going to now give you some of your own cash back. So what in essence happens is you're now paid $70 on your shares rather than 75. So it lowers your cost basis by having them give you your own money back. What does that do? Again, it's more window dressing. It's just more window dressing. So now 20% return on $75 is less than 20% return on $70. So they gave you some of your own cash back. It lowers your value, but it makes it makes it look like you're making more money. You're still making the same. It just looks like more. So they return some of your money. It's all explained in Pit News Magazine's December issue. Doc Brown wrote a whole, was it Doc Brown? Yeah, Doc Brown wrote a whole article about it, very detailed. And then Claire came to me, and Claire's like, I don't understand a thing of that. I don't know. I have no idea what Doc Brown just said. So Claire and I wrote an article, or Claire wrote an article about what Claire and I talked about to explain it in more layman's terms. So if you want to understand the splits and how all this works, it's outlined completely in Pit News Magazine in the December issue. If you don't have the December issue of Pit News Magazine, well, what in the hell's wrong with you?
Look, if you haven't subscribed to Pit News Magazine yet, then I'm going to need to see you professionally, because you must have something wrong with your brain.
Yeah. So there is that. All right. So go get Pit News Magazine. The article's in there. It's only $39 a year, and you get the first 2 months free. I mean, for $1. You get the first 2 months for $1. If you don't like it, just cancel. You don't even have to call anybody or anything. You just go to their website, pitnews.com, go to contact me, click contact me, go in there, and you can cancel it right online. You don't even have to talk to anybody. It's really simple to cancel if you don't want it. I don't know why you wouldn't want it. If you don't want it, I mean, what are you doing with your life? You don't have Pit News Magazine. It's all outlined in there in great detail of how this works. And it completely explains how the splits work. All right. It's just window dressing, really. It just means that they've given you back more of your own money, which helps you reach your break-even point faster. And it also lowers the amount of money that you paid for the shares, drops the amount of money you paid for your shares. And so if you paid 75 was the average, well, now you average is 70. And of course, that increases the dollar return. That's all it's doing. All right. So what do I think of the reverse split? Oh, I got my own feelings about it. And I could go off on a rant and rave on that if you want me to. I could tell you my rant and rave. It's just window dressing. It doesn't really mean anything because of the way they've done the math. So the math, it's just kind of irrelevant. But what my feeling on this is that they should stop doing ROCC. I think they should stop doing return of capital. I think they should just do ROC, return of cash. All right, the cash that they earn, the money they make. And they can, and I think they've got what they call the target 12. right? You've heard of that. So they got the target 12. SOXY is a target 12. Let's go look at SOXY. This is just my own opinion. It's the way I wish they would trade it, but they don't. And what they're doing is fine too, if you understand it. But most people, then it puts the burden on my shoulders as a teacher to teach everybody why they're doing what they're doing. That's why the name of their company is Yield Max, maximum amount of yield. They're trying to give you back as much of your money as they possibly can. So they're trying to give you back your money, plus they're trying to give you back profits, and they're trying to get it back to you as fast as possible. And that's cool. I mean, great. Thank you very much. But it confuses people. So what I'm saying is they shouldn't do Yield Max. They should only return. I think they should have, instead of a target 12, which targets a 12% return, a 12% growth, not growth, yield. So it's a 12% yield. And then whatever the growth is, they let the growth go all over the place, either down or up. And the problem is on this one here, this is called semiconductors. It's called SOXY. So it's a semiconductor options strategy. So they're trading a bunch of options. Let's go over and I'll show you which ones they're trading. We can go look. Where is it? Here it is. Okay. So we're going to come up here. I've got this window problem with Windows. So, okay, here we go. Okay, so here, this is Portfolio Matrix. It's under maintenance right now. So we're going to come over here to this little program, and we're going to go into SOXY, SOXY. And this program, if you slide down here, it tells you what they're trading. So they got NVIDIA, 16% of it's NVIDIA, 12% is Taiwan Semiconductor, 9.86 is ACML. They're trading Broadcom, Micron, Intel, Applied Materials, AMD, Qualcomm, Lam, and that's it. So that's 76% of what they hold. The rest of the holding is probably show all a whole bunch of little tiny firms down in here. Okay, so they're trading options on all these firms. That's what's in SOXY. So it's a diversified portfolio in SOXY. Now, they're making a lot more money than 12%. Their goal is 12%, but they're making a whole lot more money than 12%. Now, here's the problem with this. You're like, well, isn't that a good thing, Lan? Well, yeah, I mean, we're glad that they're making a lot of money, right? I mean, of course, we're glad they're making a lot of money, but the problem is they're leaving it in the fund. You're like, well, yeah, I got good growth. I like that. I'm making good, money's going up, market's going up, and I'm getting dividends of approximately 12% because that's what they're trying to target. So they're pulling out only 12% and giving it to you, and they're leaving the rest in the fund. They're not giving it to you. Well, that's rude. Now I got 12%. Whatever's left in the fund is stuck in there, not making me any money. But it's going up, Lan. Yes, but to get it out, I have to sell my shares. And if I sell my shares, I'm going to stop getting the 12% return. I hate that. I really don't like that. Because now I got a whole bunch of money stuck in SOXY that's not making me any money. It's just growing. Sure, it's growth. But that's what we're trying to avoid with doing yield first. If I wanted growth, I'd go over and put my money in Tesla. I'd go put my money over in Amazon. I'd go put my money over in some growth fund, right? Because then I can know I can buy and sell, buy and sell, buy and sell, buy low, sell high, make money, grow. These guys, they're just hanging on to my money. Sure, I could, I could sell it to get my money out, but I don't want to sell it because they're giving me return of 12%. I'm just going to live out. Well, the rest of that money that's sitting in the market is worthless to you. You can't take it out and put it somewhere else. It's going to make another 12%. It's just growing at whatever lousy rate it's growing at. I don't know what it's growing at. 5%, who knows? 15%. We'd have to go look in Portfolio Matrix, and we can't right now. So Portfolio Matrix can tell us what it's growing at. But it's growing. Great. Wonderful. I could put it in Palantir and grow at 300% last year. If I leave it in here, it's growing 5%, 10%. But I can't get to it. I can't use it. I can't take it out because if I take it out, I stop getting my target 12. I know that's why but the problem is then you come over and you do Misty. And you say, well, okay, we'll do Misty. They're not growing that one. You're getting everything plus some. They're taking out, not only are they taking out all your profits, well, Misty's going down, so they're losing money, but they're not taking it. They're also giving you your own money back. Well, that's fine with me. Then I can go do something else with it. All right. At least they're giving it to me and I can go do something else with it. I mean, I can put it back into Misty if I want to, but I don't want to. Misty's losing money. So they give me my dividends, plus they give me my ROC. They give me my ROCC, cash and capital. So I get a little of both. That's fine. That's going down. Now I don't have to put it back. It's not in Misty any longer. It's not stuck in Misty. I can take it and put it somewhere else. It's more profitable to me. That's just how my brain works. I don't know if that's right or wrong. Might not be right for you. You know, you might look at Soxy and think that's the Soxy. That's a cat's meow, man. That's the life's dream to have a market that's going up and also pay big dividends. The only problem with that is now to get your money out of there, you have to sell your shares. And to sell your shares, now you don't get your dividends any longer. So now your money's stuck in there, not making anything for you because you can't sell them. And it doesn't matter if it grows. Who cares if it grows? It's all you're getting out of it is 12% return because that's all they're giving you. Now they get to hang on to all your money. And all they're going to give you 12% of what your return is. I don't want just 12%. I want 100% of everything they give it back to me. Don't hang on to it. So then we go over to PLTY. PLTY. Look at that. Now that's beauty to me. Look, nothing. It's flat, dead, sideways. That's perfect. Why? Because they're giving me back 100% of everything they're making. I think they should have what we'd call a target 3 on growth, not yield. Don't target the growth. I mean, the yield. Who cares? Let the yield be the maximum yield max. Give me the maximum amount of yield that you possibly can, but keep the growth at 0. Actually, I would like to have the growth at like 2 or 3. 3 would be perfect. So I think they should call it target 3, not target 12. And I think they should target the growth at target 3, not target 12, the yield. Because the yield, if they make 30% and they only give you 12, well, they're keeping the other half and you're not, you didn't get it back. I want it. Give it to me. Give it to me. I want to do something with it. I don't want to leave it in your stupid fund. So I think that they should have a target 3, which is the growth. And then the growth would just be do nothing. I don't want any growth. Why do I want growth? I don't. I want my little pots of gold all along the way. I don't want any big pot of gold at the end of the rainbow that has the chance of being fleshed out at the end of the rainbow and I make nothing. I want all my little pots of gold along the way. And I can go buy a Tesla with it. I can buy a house with it. I can go buy things with it. Or I can put it back in the market strategically based on my decision making of where I want it to get more yield or to get more growth. Or a combination of both. I can do whatever I want with it as long as I'm in control. They're in control. Yeah, they're growing my fund, but they're not giving it to me. They're hanging on to it. So that's just, a lot of people like that, and that's fine, But for me, I'm a little bit more of a control freak. I want to manage my own money. I don't want them managing it for me. But I don't think it's a bad thing because it does stabilize your net asset value. This is another one of their target 12s. So see, this is a yield max target 12. It's called the Big 50. And so this is another one that they're doing target 12 on. So it's making more than 12% return because it's going up. And they're just only giving you 12%. And they're keeping in the fund the rest. Whatever else they make over and above 12%, they keep, which is what makes the market go up. I don't want them to keep anything. Give it all to me. But keep enough in there that the NAV stabilizes and just goes flat, straight flat. I don't want you to give me anything under. Don't make the NAV go 0. Don't make the NAV go negative. I don't like a negative NAV, but I don't like a positive NAV either. I want NAV to be 0. If you could just do target 0 on the NAV, that would be perfect. But actually, I'd like a target 2 or target 3 to cover, and that would be enough just to cover inflation, right? Inflation's 2 to 3 times % a year. We'll just leave enough money in there to cover inflation, 2 to 3%. We'll call it a target 3, stays in there at 3%. And anything above 3%, give it to me. I want it. Give it back to me so I can go put it wherever I want. I can go here. I can go there. I can spend it. I can buy more shares. I can do whatever I want. It's my money. Give it to me. Don't leave it in your dump fund. Don't do this target 12 thing and try and pass that off as a make me happy. I don't want your damn target 12. I want all my money back. Don't just give me 12% of it. All right. That's just the way I look at it. All right. I want the income. I don't want growth. Of course, there's an advantage to that, right? Too. The 12%, you only have to pay taxes on the 12 they give you, 12%. The rest of it stays in the market. You don't have to pay taxes on it until you sell it to get it out. But if you sell it, you don't get the 12% anymore, right? You do, but just not on everything. You don't have to take your profits. You don't have to realize your profits until you want to realize them and take them out and pay taxes on it. So there is that advantage. I mean, target 12 is only going to give you 12%. So if you're happy with 12%, you want to leave the rest in there and not pay taxes on it, that's great. So there is that advantage. Biggie, what does Biggie invest in? Well, it's the great big companies. So big companies, top 10 holdings: Apple, Nvidia, Alphabet, Microsoft, Amazon. It's kind of like the Mag 7, if you ask me. It's kind of almost a reproduction of the Mag 7. I wish they would not do that too. I should start my own company. I wish they wouldn't just go in and do the Mag 7. But see, they have a whole bunch more stuff besides the Mag 7. They have a whole bunch of like Intuit Services, Blackstone, Texas Instrument, Verizon, Philips, Adobe. So they got a lot of big companies in here, and that's nice. So that's kind of a nice diversification. But a lot of it is the Mag 7. They've already got a Mag 7. So they already have mags, right? Maggie or YMag. So this is the Mag 7 YMag. And that's pretty cool. I mean, they got YMag, and it's kind of pretty flat. That's just the YMag. They're giving you all the profit on this one because, see, it's going flat, and it went down a little bit right here. So I don't know whether they lost money and so their dividends went down. I don't have any YMag. But if you just wanted to invest in YMag, you come down here, you can see it's just all the big funds, right? So that's YMag. And they're giving you 100% of everything that they're making, which because they're so stable, there is not a whole lot of money. It's pretty low, but it does stabilize your net asset value. If you want your portfolio to be stabilized a little bit, put some money in YMag. It's going to bring down your yield because you got a bunch of money in something that doesn't pay a high yield, which is fine, but it makes it so your funds are not so crazy. That's not how it works. Going back to that mathematical model, you'll get a higher. You get a higher. Let's see, where's my? So you get a higher. I don't know where I went. My drawing, my math drawing. Anyway, you saw me. What happens is you have a higher price on your share price, but your dividends are going to go way up too, right? Because it's a bigger amount. The dividends go from 50 cents to like $1.50. Again, it's going to be equal. Nothing changed. It's just window dressing. So they changed both sides of the equal sign. So nothing actually happened. It's just because the exchange requires you to have a $5 share price, or else you can't be listed on the exchange. So they have to keep their share price value above $5, or they have the risk of being delisted. And they don't want that. So they do a reverse split. But the reason the market went down below is because they're giving out such a maximum amount of yield that they're also giving back some of the money that their ROC, their cash and capital. So they're giving back some of your capital, but that draws your money. And I like that. I'm happy they're giving me some of my capital back because it lowers my cost basis, and it also reduces my tax requirement. But it makes the chart go down. It makes it look ugly. And so everybody's like, oh, your NAV decay. NAV decay is so bad. NAV decay is only because they're just giving you your own money back. Yeah, you're right. You got it on. You're thinking the right way, buddy. You got it. So nothing, you didn't lose any money. It just changed both sides of the equal sign equally. And so you get the same thing. Again, that's what we call window dressing. Now I've gone off into a rabbit hole of what I would like to see these companies do. But, I'm just one little guy out here in university teacher that I don't have any influence over what these guys do. They had a forum over there, and I tried to get into the forum, and you push a little button on the forum thing, and it raises your hand so you can ask a question. I left that little hand raised for an hour during the forum, and they didn't ask me to ask my question. Maybe they knew that's what I was going to ask. But I was going to ask them, why don't you do a target 3 on the growth instead of a target 12 on the yield? It'd make a lot more sense. And then we get all the yield that we possibly can, but maintain target 3 to cover, because we don't want you to give us anything We want to get everything back we possibly can, except for inflation. Just keep enough to cover inflation. That's all we want. Just leave enough in there to cover inflation and then give us everything back. We want it all. We want 100% of all of our yield. Target 12 doesn't do that. See, that's why the stock's going up. The fund's going up. Everybody looks at that. Oh, yay, yay, my stock's going up and I'm getting a 12% yield. Oh, yay, yay. It's because they don't understand. They're not giving you your money back. I want my money back. That's all I'm saying. All right, just different strokes for different folks. I start my own yield max company. That's what I should do. All right, guys. Anybody have any other questions? I think we've run everybody off, Lowdown Killer. We're the only ones talking about this stuff. It's just me and you in this forum. All right. No, actually, we still got a pretty good little group here. Guys still stuck with us. So interestingly enough people were interested in hearing what we talked about. So, all right, guys, I think that's all we're going to do. I got a class tonight at the university starting at 6 o'clock. If you're in town, come along and enjoy us. We'll be on the second floor, Udvar Hazy Building, room 204 at 6 o'clock p.m. tonight. And then tomorrow is going to be an 8 a.m. class. We're going to have our lab tomorrow at 8 a.m. We're going to talk about options again. We're going to talk about selling options, options premium, collecting options premium from selling options. We're going to do that tomorrow at 8 o'clock, bright and early, 8 o'clock a.m. Mountain Standard Time. So we'll see you then. All right, one more real quick here note for you.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys, that's it. We'll catch you tonight in class at the university or tomorrow morning at 8 a.m. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.